So for me, the opportunity now is huge with accountants and bookkeepers to provide more of a proactive service, more forecasting, more future visibility. But certain things have to be in place for that to happen.
You're listening to the Spotlight edition of The Successful Bookkeeper with your host, Louis Prosperi. Listen each week as inspiring guests share their secrets of success to help you increase your confidence, work smarter, and build a business you love. This episode of The Successful Bookkeeper is brought to you by PureBookkeeping.com, the proven system to grow your bookkeeping business.
Welcome back to the Successful Bookkeeper podcast. I'm Louis Prosperi. Our guest is the VP of Accounting, Product, and Strategy at Dext, Paul Lodder. Welcome to the show.
Thank you. Lovely to be here.
So tell us about the study that Dext just did recently that will be very useful to our professionals.
Yeah, so in terms of the study we recently undertook, we're aware there is a lot of challenges in the Canadian market at the moment, whether that be changes around tax policy, political uncertainty. All of these things are having an impact. And our study reached out to 500 SMB leaders across Canada to get a feel for how are they at the moment? What are the pressures they're facing? How are they managing to address some of those challenges? And where is the focus going forward? Whenever there's a period of uncertainty, it always leads to additional sort of stress and concern for SMBs.
So what was interesting here is one of your questions was asked, and 42% of SMEs are fearing closure. That's a pretty high number. What was the reason? What was their main reason or reasons that they're giving related to that closure issue?
There's a lot of reasons that can come into play here when they're worried about closure. If we take a look at the sort of big macro sort of impact, you've got inflationary pressures. And when you've got inflationary pressures, there's only so far often business owners can put their prices up. But if you're not in control of that, it starts to impact the margins. Some of that has actually been linked to the sort of worry around tariffs as well. Now, tariffs has been going on for the story around that for a long, long time globally as well. So that's causing, particularly if you're an importer or an exporter, there are some additional challenges there. And what you often find is when there's an impact to the supply chain, you often see a corresponding impact to cash flow. And it's cash flow that often leads to businesses unfortunately failing or coming up against a period of time where, they're struggling to keep the lights on. So there's a number of different factors coming into play, but what many businesses are seeing is an increase in cost, their cost base.
So you brought up an interesting one because cash flow always becomes probably the key survivability factor more than profits when it comes to these kind of things, right? So do you think that this is an opportunity for professional bookkeepers and accountants to refocus their services into this area? What do you think on that?
There is a huge opportunity. I spent myself 21 years in practice. I'm an accountant myself. And often what you see, when things are going well, people aren't really looking at their numbers as closely as they should do. Their budgets may sort of slip a little bit. You spend a little bit more at the Christmas party. And what many businesses actually do is just run their business by looking at the balance in their bank account. And if it looks good, they're all happy. When things start to sort of see a downward trend, this is the real opportunity for accountants and bookkeepers to do more forward planning. In the past, there's been so many historical conversations. This is where you were last year.
Sure.
This is your tax liability for the previous period. What business owners are really looking for from their accountants and bookkeepers is more proactive, forward-thinking advice. And this is where forecasting, cash flow forecasting, is super powerful, because you can run some forecasts and potentially preempt potential issues further down the line. Now, we all hope they never come to fruition, but sometimes it's better to be forewarned? I can never remember the saying, but it's better to know that's, much sooner rather than the day before. And the worst case scenario, because I've seen it many a times in the past, is when you've got a client picking up the phone going, I can't pay the wages today. I can't pay these suppliers. Often you don't have enough time to do anything about it. So for me, the opportunity now is huge with accountants and bookkeepers to provide more of a proactive service, more forecasting, more future visibility. But certain things have to be in place for that to happen.
So let's talk a little bit about cash flow, because the key thing is, it sounds like a great idea. And technically, all business owners should be doing cash flow projections, whether it's good or bad. We all understand that. But I agree with you. Once they're in straits where their cash flow is being impacted, and like you said, surging costs, unable to transfer that surge to the customer, means lower profits and lower cash flow. So how can the bookkeeper or accountants talk to the customer in a way that incentivizes them to take us on as the cash flow provider? Because I think the bookkeeper and accountant probably would love to do it, but the key question is, during these times, they should take advantage of it. And one of the key things that they should probably tell them or prep them for.
100%. And often, if you just go out to a client and say, would you like us to do a cash flow forecast? The client's probably going to say no, because it's got a cost associated with it.
Correct.
There's an element of the need to show empathy. So many business owners stay awake at night worrying about cash flow. This is where the bookkeeper or the accountant can alleviate that stress. But it's more than just cash flow. This is about strategic planning and running the business as efficiently and effectively as possible, so that decisions are made based on accurate, up-to-date financial information rather than knee-jerk reactions. So really, the bookkeeper or accountant should be positioning themselves as that strategic advisor, that sounding board, that expert who isn't just speaking to one business, they're probably speaking to many hundreds in certain circumstances. They have a good feel for what's going on in terms of the market, in terms of activity. And it's those insights that really allows you to provide strategic sort of business insights as well, conversations. And it's demonstrating that value. So whenever I did sort of cash flow forecasting or any forecasting, I think it's really important to gain traction by asking, what are your personal goals and what are your business goals? Because if you understand what the business owner's goals are, you can actually then start to position yourself as helping them achieve those goals and what gets in the way of achieving those goals. And you may find that actually the business owner wants to take more money out of the business. Absolutely fine. But they can't because the cash flow doesn't permit.
Right.
And that's when you start looking at other elements of the business. What is their credit control like? Are they using technology to chase debts? How can the bookkeeper or the accountant support on that workflow? Because if you can help your client achieve their goals, they will love you forever and a day, because you've made it very personable and you're helping them achieve what their dream is. So when I look at cash flow, I actually encompass it into much wider conversations because it's often always connected.
So I love that analogy, make it personal, because to be quite honest, the cash flow budget is not personal. It's the exact opposite of personal, right? So I think if you can tie in your cash flow where this is what you're charging into a personal connection to the owner. I think that makes extremely great sense.
100%. If they
And
want to take more money out, it's like, okay, how much more profit? How much debtors do we need to convert? What does the turnover need to be? You could actually end up, before you know it, for you to take out additional income, you could be
right.
talking about a pricing strategy and how they should be pricing their services. So you identify what their need is, and then you build around it to help them achieve it.
So what was interesting in your study also is what you found, like, because bookkeepers and accountants, for the most part, there's ranges in there,
There
is
is.
they are using technology for their services. But you indicated when you have do-it-yourself or SMEs, which you said is about 35%, they still use a manual process.
Yes.
Is that correct?
There's
And
yes, there's a lot who will still use a manual process rather than embracing technology.
and we all know that a manual process results in slower times in getting the information,
Correct.
inaccuracies, other things taking precedence. What have you found out that if you could, like, how do you incentivize the SME to say, okay, look, you need to switch to automation, and we are the automation experts? Like, give us some examples of that.
Yeah. So the approach I always took, and I still speak to many firms about this, it's if they're using a manual process, it's how much time are you spending on that process? So let's say you
Right.
were a painter and decorator,
Yes.
and you charge $100 an hour on average for painting and decorating. Now, if you're spending 4 or 5 hours doing your bookkeeping, that in essence, the time value, or the value of your time, is what you notionally charge when you go out and do a job. So if you're spending 4 or 5 hours doing it, you're potentially losing revenue of $400, something like that, based on that number. If you can use technology, or if you were to use technology, you could potentially get that job done in an hour, potentially less. So I freed up 3 hours of your time, 3, 4 hours of your time. You could use that time to generate additional revenue, or more importantly, from lots of SMBs that we hear from and from the research, many of them are actually, some of them will just want to use it time back for themselves because they're
Right.
stressed. They may want to spend time with the family. They may want that weekend back. They may want their evenings back when they're normally doing all of this paperwork. So, and then with everything automated, with up-to-date numbers, then it comes back to that real strategic advice. It's very hard for me to advise you if your numbers are 6 months out of date or 3 months out of date. We can have much, much better conversations with up-to-date numbers. Why is that important? Because if I've got up-to-date numbers, I can link that back to what your goals are for the business. And I can help you stay on track. I can come up with strategies to help if we need to pivot, to make sure that you continue to hit those goals. So it's not just about, because everyone will always focus on the cost of anything. It's about the
Sure.
value of automation that it will bring, and time is that huge value, which is precious and is often limited. And I, from my personal point of view, when I was in practice and doing this work, I would have always have preferred to free up time to spend time with the family and the kids and seeing them after school and things like that. And that's that's one of the big pluses of technology. When it's being properly implemented, it's being used well, you get time back for however you want to use.
So you know what's interesting about your report, and we're going to stick on cash flow because I think that's
Yep.
a big thing, is 1 out of every 4 in your survey approximately indicated cash flow issues. So if we take that from a professional accountant and bookkeeper's perspective, if they have 100 clients, And if they're not doing at least 25 cash flow advisory services, that would be a good indication that they're not probably maximizing or at least addressing cash flow issues in their business. Does that make sense? Do you think
Yeah,
that makes sense?
yeah, I think what you're saying is there's an opportunity there to be had, but not many accountants and bookkeepers at the moment are taking that opportunity
Yeah,
up.
because the reason why I'm saying that is that your study. So here's as a consultant and a advisor for accounting and bookkeeping. When I say you're probably not doing enough cash flow budgets or cash flow services for your practice, 9 out of 10 times what they say to me is, well, no one wants it. But according to your stats, 1 in 4 need it. So
Yes.
something's wrong with the bookkeeper account not taking advantage of the built-in value there.
Agreed.
Do you agree with that? Do you actually
Yeah,
agree with
and
that?
I think, and this is still an issue sometimes, that accountants and bookkeepers often make the assumption that their clients don't want a particular service. And often I will
Right.
hear is, I know my clients, I've known them for years, they won't want this, they don't need this. Linked with that is there's also a hesitancy to do it because the firm itself hasn't built a strategy around it. You can't just go out to clients and go, would you, we can do a cash flow sort of service for you. You've got to model it around and you've got to test the waters as well. And then the third thing is often these things don't move forward is because the accountant themselves hasn't got the capacity. And if they haven't got the capacity, they're worried about taking on or providing additional services that, if they don't meet client expectations, could lead to reputational damage. It could lead to the client actually leaving. And this comes back to why it's so important for accountants and bookkeepers to embrace the technology they have, as well as SMBs, use the features that are available, because that will create maximum capacity or free up the most time. That then allows the firm to start to explore other strategic initiatives or service lines. And it's often capacity which can be a blocker.
So it's funny where we're going, because honestly, Paul, it's two things that you've mentioned. Is technically the bookkeeper and accountant most likely has the knowledge or capability of doing cash flows, but they don't have the infrastructure, the technology, or the capacity, right? But let's be honest, if you provide what we just talked about, cash flows, which is, in your statement, the business enabler rather than a record keeper, the profitability and the value to the customer goes up, as well as your billings, but not necessarily your workload. Does that make sense?
Yeah. Technology allows you to create cash flows very easily now. There's lots of solutions out there, but the cash flow forecast is only as good as the information that is feeding the forecast. So if you don't have up-to-date completeness of records, any forecast is likely to be accurate. So that's stage one, that there has to be this shift to more sort of regular bookkeeping. Second part is, if I was just to hand you a cash flow, you're not going to see any value in me just, here you go, here's a cash flow. I have to pull out or explain to you where there's potential, issues going forward, or what if scenario planning. Cash flow, just a straightforward cash flow forecast, only adds so much value. What you really want is to link it to a P&L forecast and a balance sheet forecast as well. And then you start doing a bit of sensitivity analysis, because then I can go, look, if this supplier increased their prices by 5%, this is going to be the impact on your cash flow based on activity that's happened in the past going forward. So we need to start thinking about, what is our strategic response to that? How are you going to mitigate that impact? So sensitivity analysis alongside forecasts becomes critically important, because I could do a very quick short-term cash flow forecast. Balance today. These are the suppliers you need to pay. These are the wages you need to pay. This is the money you're going to take out. This is your bank balance at the end of the week. Quick, easy, straightforward. But if I was a business owner, and many business owners do think like this, it's more value to you if I could tell you or give you a good idea.
What if?
Yes,
Yeah.
And in a month's time, 2 months' time, 3 months' time, your goal could be you want to buy a commercial property. Okay, well, let's do the scenario. What if tariffs suddenly increase significantly, and you're an importer or an exporter, and you're impacted by that? What are you going to do if that happens? If you've got the modeling in place and the scenario planning, you hope that you never need to implement any changes. You hope it never comes to light, but it's so much better to be able to go, actually, with a clear mind, we modeled for this, we planned for this, and this is what we're going to do.
We'll have to talk about where they can get this information, because it's in the study, and I think it's fabulous. One of the things that you also talked about, and we just hit on what ifs. A lot of SMEs don't do recession, cash flow.
No.
You said only a quarter, so that means 75% most likely of a bookkeeper and accountant's portfolio doesn't even do a what if recession hits cash flow.
Correct.
And I think that would be a great...
I think this is where every advisor could do just as a door opener, just for, if you were my client, I've done a forecast for you. All I've done is just to see what happens if this changes by 5%. That starts the conversation. And from my experience, what often happens is the SMB owner comes back and goes, would you mind just doing it if it was 10%, or increase that by 10%, decrease that by 10%? And that's when you start playing around, because at the end of the day, anyone can make a forecast look good. You can put a positive lens on it and go, oh, can you do this? And everything looks brilliant. You have to prepare for the worst and have different scenarios for that. But you also need to consider what happens if things go really well. What's the strategy? What's the plans? What's the direction of travel? Where are you going to take the business, and things like that? And this is why, I think it's so critical in every client meeting that accountants and bookkeepers are talking about, have you planned for, if this supplier goes out of business? Do you have key dependencies on any particular suppliers or any particular customers? There are so many avenues to go down. But often when you're doing the forecasting, you can also bring in some key KPIs as well. And that's where you can start picking up trends.
What KPIs, which are key performance indicators, that you think a cash flow should, like, as a staple? I know every industry is a little different, but as a general rule, what do you think?
For me, one of the most important ones is delay day index, not delay day index, debtor days.
Debtor days. Can you explain your definition of debtor days?
So debtor days is looking at how long on average after you've sent an invoice out do you get paid. So if I raised an invoice today, and I do it for all of my customers, and they all pay in 30 days, I have debtor days of 30 days. It takes 30 days for me to get the money from my customers. If I start seeing that go up as a trend, then my customers are starting to take a bit longer to pay me. If they're taking a bit longer to pay me, what are the potential implications for that? Because do I start stretching out how long I pay my suppliers? And this is where we come in this very sort of vicious cycle as such, is that you take longer to pay me, I take longer to pay my supplier, and then you start to get into this cash flow challenge. So for me, debtor days is really important. And ideally, you would look at that, particularly some of your top customers, whether it's changing at a customer level rather than just a global level.
So that could be many things, but one of them could be exactly what we talked about, economic pressures
Correct.
generally. And now you're seeing it, and now you would have to adjust your cash flow, right?
Yeah.
So
You need to
I
think,
get
if
it.
everyone's going to
Yeah.
take me an extra 10 days to pay.
Yeah, because you can't, like, let's be honest. If you have a heavy payroll, you can't all of a sudden tell your
Correct.
staff, we're not collecting fast
Yeah,
enough.
exactly.
We're going to postpone your payments for 10 days.
Exactly right.
Certain bills you cannot
Certain bills
postpone.
you cannot postpone. And what often happens, unfortunately, is the SMB owner, the business owner,
Yeah.
who actually postpones them taking a
Correct.
wage.
They're usually the first ones to take the hit.
And,
Yes.
and everyone else, all of their employees get paid as planned, and key suppliers as well. And that's why it comes back to, when looking at cash flow, and this is where accountants and bookkeepers can help. Can you help them with credit control? Can you bring in technology that automates the chasing of debts? Can you bring in technology that actually helps them improve the efficiency around raising invoices and things like that? Because the other thing, SMBs, they often are so busy that they may delay even raising their invoice. And if I delay sending my invoice to my customer by a week, the risk is it actually, the chances are it just pushes out when I get the money in. So you've got to bring everything forward. And ideally, you want to be raising invoices as quickly and as frequently as you possibly can, because as soon as it's in the system, the sooner you're going to get the money.
So let's talk a little bit about the expertise of bookkeepers and accountants to automate people's systems. Here's my dilemma, and you probably know this as well, is if we bring automation into the firm, the SME, right?
Mm-hmm.
How do we charge for that? We should be getting paid more, shouldn't we?
100%.
Not less, even though the automation makes us spend less time on it. How do you do this from a perspective from the bookkeeper and accountant to charge more money, even though they're automating the system? If you can give them some ideas on how to approach that, because what they'll do is, if I say to them, I'm going to save you a lot of time and I'm going to automate this, and I'm going to charge you an extra 60% more on my bill, they go, well, but you're not doing the work. So, Paul, how do you tie those two together?
So, and it's a really good question. So there has to be, first of all, this shift from time-based billing to value-based billing, because
fair enough.
So that's one of the first things that, and many firms are already moving that approach. Then you can break it down into different parts. So I could charge you a one-off fee to implement the right tools, give you some training, and then away you go. So it's a one-off project to automate your accounts receivable, your invoices and things like that. I could, in addition to that, go, actually, would you like us to take more control over your accounts receivables?
Right.
And we will, every month, also chase or pick up the phone for anyone who's not paid. That you have to try and estimate based on the volume that you think you're going to have to, how many people you're likely to have to phone and things like that. Then you can go even further, which is something we're starting to see more in the UK, and it's often called different things, but virtual finance function, virtual outsourcing, where you actually take on the whole finance function for your client. You take on the full service. And there's often a cap as how far you can go, because if they needed to employ somebody, you would have a feel for how much it costs to employ someone in-house, but you will have a feel internally, and that's where you're providing the whole service. For me, there is no one size fits all. It's often offering choice and flexibility to your clients as to what they would like, in terms of, some will want, actually, can you deal with all of the implementation, all of the setup, and we're happy to own it going forward. Others may go, we would like you to do everything and we're prepared to pay you for everything. Benefit to the client, number one, it's always peace of mind. If I can improve your debtor days and start getting money in quicker and start improving your cash flow, there's peace of mind. And hopefully it means every month you're not worrying about, can I pay the wages? Can I take a drawing this month?
Right,
Secondly,
right.
many SMBs do use overdraft facilities or take loans. Imagine if you accelerated cash collection, would you actually need to use third-party funding? And if you didn't need to use third-party funding, you're going to save on interest and charges as well. And then thirdly, once you've improved cash flow, there is many SMBs have held back growing based on our survey and exploring new areas.
Right, because they don't have the cash flow resources.
Because
Absolutely.
it's all the so then you can start moving towards those business goals, those personal goals as well, because actually you've addressed one of the main pain points around cash flow management and up-to-date numbers.
So that's interesting. We've been talking about cash flow only, but what we've done is we've talked about recession proofing a company. We've talked about possible growth. We've talked about making sure that their funding or their financing abilities can be freed up for other valuable things, like you indicated, like possibly growth issues. And we've also talked about, which is interesting, is being the sounding board and also the business enabler or the transformation agent for the SME, right? And the key part where I'm going to emphasize to anybody who listens to this is Paul also agrees you got to stop charging by the hour because your value exceeds your hourly rate. So if you do it based on value, whether you take menu or project-based or subscription modeling, which is all value-based methods. Did I hit that correctly, Paul? Am I hitting the right?
Yeah, 100%. It's particularly if you're charging by time, technology is going to automate more and more.
Right.
There's no doubt about it. And the risk for accountants and bookkeepers, if you have a time-based model, you're actually starting the process of lowering your fees and your turnover. Now, you've got to think, okay, yes, I've created capacity, but what are you going to fill that capacity with? How are you going to keep your turnover at the level it is and continue to grow? How are you going to get more from your clients? How are you going to offer them more? The great thing about technology is it often leads to more conversations. It leads to more interactions. The more conversations you have with your clients, the more you find out about your clients, and that will often lead to additional work and services being provided. For me, it's always been about relationships, being an accountant, understanding my clients' needs, building a strong relationship, being that trusted advisor, being that person they reach out to ask for advice and helping them. We always hear about advisory everywhere. No one really defines it, but for me, advisory is just helping my clients achieve whatever they want to achieve and answering their questions.
So if we take it from a general advisory, I like the thing about transformation. So you're basically moving advisory services is transformation to the customer, right? At the end of or client, sorry. I use customer. I know most people use client. I understand. But they both mean the same,
they
to be
both
quite
mean
honest.
the same. They're exactly the
same. Right. So I think that is wonderful. I really love the how you got this information from the 500 and plus business owners and really taking a look at it. And based on our numbers, if any accountant or bookkeeper says none of my customers want it, we could tell based on the numbers that's probably not true.
Correct.
Is that right?
Yes. I would say not every one of your clients is going to want it.
But if you only have two, I get it.
Yeah, exactly.
Paul, if you have four, maybe, but if you are in the 20, 50, 100, 200, and you should have based on our numbers, 20 to 50 of these doing
Yep.
it. Now, you hit the nail on the head with the other one. If you don't have the infrastructure and so forth, I think the investment is worth its while to build that into your
It
practice.
is, and I always believe, and I still think it's true today, it's easier to grow your business, your accounting or bookkeeping firm, from your existing clients rather than going out and trying to win new clients. It takes time. It takes time to onboard them. It takes time to build up the relationship. So strengthen those relationships with your existing clients, and technology is that enabler. Technology helps you strengthen those relationships because you can see information, you can be proactive. Who wouldn't want their accountant or bookkeeper picking up the phone going, I've just looked at your numbers. I've just noticed actually your margins are falling slightly or your debtor days is increasing. Might be worth us just having a chat just to make sure there's no sort of underlying issue that we don't want to creep up or be a problem going forward.
So here's another one before we wrap it up. And again, you're speaking to the choir on this side, Paul. To be quite honest, is deepening relationships is having conversations. So you're basically saying the more time you can spend talking to your client rather than doing the work, the higher value the client gets, and also the less sensitive they are to your fees. Did I hit that correctly?
That's absolutely spot on. I think because they'll see more value, and often what you'll often find is the conversations aren't just always focused on the business. They may talk about, I've got children going to university, or my son or daughter is starting to learn to drive. And then you go, actually, we might be able to do something with that around insurance in the business. If you don't have the conversations, it's very hard to always know where to advise. So you're always looking for little sort of snippets of information that can often drive a conversation down a different path. And often is the case, yes, you'll be able to give some advice on the call and things like that.
Sure.
But it can often lead to, actually, would you like us to pull together a proposal for whatever this project exercise may be? And then you can decide whether you'd like to move forward. But if you've already sort of demonstrated that you're helping them achieve something, they're already bought in because they're excited about something. They want to expand the business. They want to buy a holiday home. And you've just actually started to plant the seed in terms of, let's build out a plan, a 5-year plan to help you get there.
Well, Paul, this has been great. To be quite honest, even though we focused on a specific advisory product, that product and how we approach it is probably very valuable in my sense. And when we talk about cash flow, we talked about a lot more. Where could people really find out more about the study that Dext has done? Where can they go?
They can, if they're already a Dext user, reach out to their account manager, and we can certainly provide a copy for them. I will double check to see if I think we might have the study on the website as well. That can be seen as well. And then if anyone wants to just find out more about Dext, there's plenty on the website itself, because real-time data collection will lead to real-time reporting, and it's that will lead to proactive advisory services.
Fantastic. Well, Paul, thank you for being on the show.
Pleasure. No, it's been a lovely to chat. Really enjoyed it.
Fantastic. That wraps up another episode of the Successful Bookkeeper podcast. To learn more about today's guest and to get access to all sorts of valuable free business building resources, you can go to thesuccessfulbookkeeper.com. Until next time, goodbye.
You've been listening to the Spotlight edition of The Successful Bookkeeper with Louis Prosperi. For more information and to access the resources mentioned in this episode, please visit us at thesuccessfulbookkeeper.com. Thank you for listening and have a great week.